A more upbeat assessment of the economy marks this edition of the Dublin Economic Monitor. The key indicators that economy watchers have been tracking over the last year and more have been, as we know, inflation and interest rates. Inflation was particularly painful, which led to increased interest rates. We're now starting to see that inflation has fallen away reasonably rapidly. There's been sharp declines in energy prices in particular that have driven that decline, amongst other things. And we're now starting to move into the space of interest rate cuts. We're not quite back at the inflation target of 2%, but we're not far away, and we would expect that to arrive in this year. With interest rates, the thought from the markets is that the decline in interest rates will be a little bit more gradual than previously thought, but we would still expect to see interest rates at about 3%, maybe just over 3% by the end of this year. That's really starting to contribute to a much more optimistic outlook for the Irish economy and the Dublin economy. The EU sees the Ireland economy growing faster than it previously thought in this year, and a stronger growth in 2025 of just over 3%. It's encouraging to see as well that business performance is strong. The S&P Global Purchaser Managers Index is around 54 in this quarter. Anything above 50 is expansion mode, so it's very firmly in expansion territory. And it's not just business performance that's going well in this edition of the Monitor. We're seeing MasterCard spending and consumers looking much more engaged in the economy and much more willing to spend. So lots to encourage us that the Dublin economy is on the right track and we're into a period of rebound and regrowth.